Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday, the 31st of May. Can you believe it's the end of the month? You know, if May was a great month if you followed our trade triangles. We're going to be covering all the markets today, and of course, I'm going to show you one market a little later on that actually is up 1,000%. Yes, 1,000% if you had followed the simple rule. So stay tuned for that. But a lot of people didn't follow the rules in May, and it was a tough month for them, but not for the trade triangles. I'll show you why I mean that. So let's go to the markets, but first let's just have a quick message. This is really important. Is personal one-on-one Market Club coaching right for you? If you've never had personal one-on-one coaching, if you play tennis, golf, or anything, you probably had some lessons and so forth and so on to help you improve your game. Well, when it comes to your money, most people don't take the time or the effort to really learn how it's done. So I want to invite you personally to a one-on-one market club coaching scenario. All you have to do is give us a call. It's a free consultation, and the number's free. What could be better than that? 877-219-1482. So give us a call today, and let's tell you about one-on-one Market Club coaching, how it can help you improve your game, because we have some great opportunities here coming up in the next several months. So let's go back to the markets, and let's take a look at the S&P 500, which is not doing too well. It's down close to 7% for the month, one of the worst months we've seen in quite some time. And it's not really over yet. We may see a little bit bounce, but this is the support area. The key level I'm looking at right now is the 1290 area on the S&P 500. Currently trading around the 1300 level, so we may see some bouncing around that area. But generally speaking, if we see a close below 1290, that's going to not augur well and indicate this market's heading down to the 1200 level. You can see all of our trade triangles are negative. We're a little bit oversold. However, this pattern looks still negative to me. So let's go to our next market. That's going to be the Dow. And the Dow, the low close there was 12,336. Can't talk today, I'm sorry. And we're 12,355. So we're just a little bit above that level. But I would say if we close under 12,300, for example, or 12,330, I think that's going to be a negative for this. This market still looks like it wants to go lower. There's still a lot of energy above this market. You can see just based on our trade triangles where we stand, but you can see this is a definite top, and you've got the pivot point, the double top right there, and you've got a measurement if you take from there 12.7 up to, let's say, 13.3. You can just, that's 600 points, so 12.1 somewhere around here could very easily be a target zone for this market. So let's clear the screen, go to our next market. The next market we're going to be looking at is going to be the NASDAQ, which doesn't look quite as bad. Still not good, still minus 100. The trend clearly down, and we expect this trend to continue. So moving on to silver market, this is going to be very, very interesting. Yesterday we outlined this scenario we saw with a 7-day low, and what I want to share with you today. So this is the pattern. So here's the lows right here. And every time you've had a low, you've had like a 4-day rally. So if we get like a 4-day rally like this, could be a very interesting. But this is a longer-term concern I have. This pattern here is a triangle formation. Not a trade triangle, but a triangle formation. Normally, if it breaks out to the downside, it's a continuation pattern. They normally are continuation patterns. With the trend being down, this looks to me like it potentially could be a trading pattern to the downside. So let's see how that plays out. And as always, we're going to rely on our trade triangles because they don't steer you wrong. So let's clear the screen, and let's just go to our next market. And the next market we're going to be looking at is gold, of course. And gold, same pattern there, 7-day low, 4-day rally. And this is a big level here in my opinion. That's right around the 1585, 83 level. If the market gets over there, it's going to take a shot at the 1600 level. Still not bullish on this market with all of our trade triangles negative, indicating a longer-term downtrend. And of course, May was not a good month for gold. And a lot of gold bugs are saying, like, why is this going on with all the problems with Europe? It doesn't matter why it's going on. The reality is this is what the market's doing. And if you're going to be a successful trader, you have to listen to what the market's doing. So let's go to the next market, which is clearly listening to what the market's doing. This is copper. That's a new low move for copper, taking it all the way back to basically, let's see, we closed at 345, and we're down for the year. Copper is lower for the year now. And I would not be surprised to see this market move down to the 310 level. If we just put a simple line chart in and go max out this, you can see where potentially we can see the 310 level right here. We see this market going back down. That's October 20th of 2011. So we can see the market come down to those areas and still have room to go even still further. So let's see how that plays out. But it looks like to me we're in a deflationary expectation period right now, and I think that's what the market's looking at. Now remember, I'm going to show you that stock that's made over 1,000% in just a little minute, so stay tuned. Here's crude oil, much the same pattern there. Crude oil is down again today. It's just liquidation more than anything else. It's 88.67 currently trading on the July contract, minus 100. Trend is clearly down. This is the next level, big support area, 80. We'll see how the market does at that point in time, but you can basically get an idea of where, if you just draw where the 80 level is coming from, you can see it has had good support there in the past. Now, not to say it's going to hold, but that's where the logical place would say, as a trader, you'd have to say that's an area that a big number, big handle, 80. Let's see how that works out. So let's go to our next market. And the next market we're looking at is the euro. Of course, we've been bearish on the euro. We thought this is a very negative situation. And you could also play this out even further in terms of the cycles. We're looking at this potentially to move still lower and potentially test the 120 level, which is the first level we see support coming into this market. But you can see, just based on the type of market that we're seeing, the monthly trade triangle has been negative. This market from 139.69. That's 139.69. It's currently trading at 123 and change, 123.50. So huge profits in this market longer term. But this is, you can see this pattern of lower highs. If you look at this high longer term, and lower lows. Is this going to be a lower low here? I think it probably will be. So let's see how that plays out. Generally speaking, it would not be out of the question to see this market just totally disintegrate with Greece pulling out of the euro, which I think is a given. I think it's, I can't imagine any scenario where that would change. And I think other countries are going to have serious problems looking at this. I mean, all this money is being spent and spent and spent and spent, and it's time to pay the piper. So let's see how that plays out. So it would mean that euro would go down vis-a-vis the dollar going up. So it's kind of like a catch-22, which making our exports more expensive in economies that aren't doing well. So not a good scenario for anyone. So looking at our next market, the CRB, Reuters Jeffries CRB index, which is a commodity index. We talked about this before. We talked about the trend line being broken from back here, which was an important trend line in our opinion, because that was a very important low. You can see, boom, broke through the trend line. It had tested the trend line. It's coming back down. I think we're headed for the 250 area, which I think is and will be, plays into that scenario of the deflationary period. Also potentially going down to 200, which was the previous low that we saw right around here. And that, to me, is like a big handle. Like the 80 handle's a big handle on crude oil. This is a big handle on this market as well. So anyway, let's take a look at our next market. And we're going to look at a couple of different markets. In fact, let me just close this up. And we've been ultra short. The S&P 500 is working out well. That's a way to hedge your portfolio if you want to stay in stocks. We recommend being out of the stock market right now or short the market. And the same with the euro. You can actually be short the euro with the EUO. That's up. These are ETFs, of course, we're talking about. And a couple of markets we want to look at is this one right here, First Solar. This is the one I want to talk to you about today. So let's go back here. And you'll see something that's quite remarkable on why the trade triangles are so powerful. So all I want to look at is just about a year's worth of data, maybe a little more than that. And you can see right away what's happened. You can see that this market has been a clear downtrend, and there's nothing to say you can't short these markets, but here's the signal. And it was a year ago, May 5th, at 132.17. The market's currently at 12.70. That's over 1,000% profit in a year. That's how powerful the trade triangles are. It just goes to show you you can trade with the trend and make a lot of money using a long-term monthly trade triangle approach. If you're more of an intermediate term trader, you could use a weekly as well, combined with a monthly. And you can see even there, your 37.88, that's a 300%. So that's a 300% profit just from the last signal. And if we clear everything off the screen, and we go up to the market, and we look at our weeklies, you can see, boom, there it is, right there. There's the signal right there, and that was on the 23rd of this year, February 23rd at 37.83. So huge move down, and that's how powerful the trade triangle is. Now I want to show you something else too. So let's go back to our drawing board. I want to look at this stock right here, ADGE. Now this was ADGE. Let me get this right. This is the biggest winner in the utility sector, which was up 4.68% last month, in May rather. The utility sector was up 4.68 when the biggest losing sector was the basic materials, not energy as everybody talks about, but basic materials, which was down 5.82% for the month. Now, ADGE was up 25% last month. Now, let's take a look at this, and let's show you where the trade triangles kick in. So let's just do the monthly. There's the monthly. And that's from January 4th. Again, you're going to stay with the winning trades, and you're going to get out of the losing trades. And if we scope this out even further, you can see there's the sell signal right there at 276. And again, this is not an expensive stock, and I wouldn't recommend this for everybody because it's very, very cheap stock. But it just shows you how the trade triangles work exceedingly well in all types of markets. But again, you can learn all this and how to use this with our personal one-on-one Market Club coaching. Just give us a call. It's a free consultation and a free call, so what are you waiting for? 877-219-1482. Hey, I'm Adam Hewison for Market Club. Thanks for stopping by. I hope you enjoyed this video. We've got some great markets coming up for this year. It's still a lot of months left, 7 months left to trade, some great opportunities, and we'll be helping you find those opportunities with Market Club. Have a great trading day.